Hi, this is Evan Hutcheson. I'm going to help you file rental income or loss on the Schedule E form of your individual tax return. I'm going to use the IRS forms that I've downloaded off the internet as a guide for filing. The best way for you to file, if you're going to file with the IRS using the IRS forms, is to go through their website to free fillable forms. It's a pretty simple process, and they do a lot of the calculations for you. So when I'm doing the guide here, I'm going to assume you're using the free fillable forms, and I'm going to show you what calculations the free fillable forms automatically calculates. So a lot of people, maybe you're included, maybe you're not, think that having rental revenue coming in is a surefire way to have surplus of income, but it's actually pretty common to have a tax loss on rental activity due to all the interest and the depreciation and everything like that. You are normally not allowed to deduct the tax loss, since rental activity is considered a passive activity, unless of course you're a rental real estate professional. Then it's your job and it's not passive activity. However, if you actively participate in the activity, in the rental activity, which means if you collect the rent yourself, if you call the repairman yourself, if you don't have like a management company doing all this for you, you're actually involved a little bit, then you are actively participating. If you're actively participating, you can deduct up to $25,000 of your loss. Now, if you make more than $100,000 on your modified adjusted gross income, that $25,000 starts to fade away until you hit $150,000, when that loss completely goes away and you're not allowed to deduct anything. So basically, if you make less than $100,000, you can deduct the full amount, up to $25,000. If you make more than $100,000, that threshold starts to decrease until you hit $150,000. And when you hit $150,000 of modified adjusted gross income, you can't deduct anything. So I'm going to go through this form real quick. The first question it asks is, do you make payments that would require you to file a 1099? So if you made payments over $600 to a subcontractor or an LLC doing some work, then the answer would be yes, and hopefully you filed a 1099, because if you remark yes here and no here, that is not good. The IRS sees that and they do not like that very much, because they know you should be filing a 1099. So me personally, or this dummy John Doe, this dummy tax return, I'm going to put no, so we don't even have to answer this question, because he did not file, or he did not pay anyone over $600 to do work on the house. We'll just say it's at 444 Main Street. And on the free fillable forms, the type of property, I think you can do a drop down to single family residence on this. You see the type of property here, it's just number 1, so I'm just going to put 1 right here. Fair rental days, we rented it for the full year, or he rented it for the full year, so that's 365 days. He had no personal days. If you have like, there's a certain law, if you have personal days of the rental property of at least 14 days out of the year, then you're not allowed to deduct the loss, or you're not allowed to deduct a portion of the loss at least. But in this scenario, we're assuming that you're filing the return and this rental activity is for the full year. This isn't your personal house at all. It's just strictly your rental, your investment property. And we'll just say for the rents received, you've received $9,178. And then you can put your advertising costs, your auto and travel. You can actually deduct mileage for your business or for your investment activity right here, or you can take actual expenses and depreciation of your vehicle, depending on how much of the vehicle was used for this activity. You have to allocate it. Cleaning and maintenance, commissions, insurance. You can take all these expenses. We're going to say he had mortgage insurance of $881, and mortgage interest of $3,770. A few repairs totaling $368. So all these expenses are going to be totaled right here, and under most programs, including the free fillable forms, this is automatically filled in. So we also have real estate taxes of $937. We have utilities of $2,198. Then we get to depreciation, which is kind of a tricky one. You can depreciate your house that you're renting out. You can depreciate the equipment that you purchased for the house, rental appliances, improvements to the house. He's only depreciating the house right now. He paid $81,950. It was a good deal on a small house, and he can depreciate that $81,950 house over 27.5 years. So you can go to publication 527. It's the residential rental property publication from the IRS. Go to chapter 2, depreciation of rental property. We scroll to the portion of that chapter that deals with percentages of residential rental property and how to depreciate it. You see year one, it's kind of a weird percentage each month depending on what month you place in service. But years 2 through years 27, excluding the half year at the very end, it's all the same percentage. It's all 3.636%, which is 1 out of 27.5. So if you put it in one of these years, all you need to do is take that amount of the house and multiply it by 3.636, and this is his third year in renting this house, so he's going to do that. If it was the first year, the last, or the 28th year, then it would be a little bit different. But we're taking 3.636% of $81,950, and we get a total of $2,980. So when you put all these expenses in, this is all he has. You can get the total right here, and you can also put in other expenses here and just list them out, and it'll come up with a total. But he doesn't have any other expenses, so we have the total right here, which is $11,134. And subtract line 20 from line 3. This shows your income or your loss. In this case, $11,134 is more than $9,178, so it's going to be a loss of $1,956. And you put that here too. There's parentheses right there, so I'm not going to put a negative sign, because that already means that it's a negative. And then 23A and 23C and D and E, these all kind of fill in automatically through the free fillable forms. And it's pretty simple too. It's just asking for certain amounts up there on the top. So total amounts reported on line 3 for all rental properties. That was the income line, so that's 9178. This right here is the mortgage interest line, so that's 3770. This is the depreciation line, so that's 2980. And 23E is the total amounts of expenses, so that's back on line 20, 11,134. Now, this will fill in automatically too, usually. But 24, you have to input whether you have an income or loss, and you have a loss. 25, line 25 is the loss, and that's 1956, and that's way under 25,000. And this person, John Doe, did not make $100,000 in the year 2013, so he gets the full amount of the 1956 loss. So that would then go on his tax return right down here on line 17, negative 1956.